Good morning, ladies and gentlemen. It's Thursday, 13th of August. We're live recording here for you at the Collective Creative Initiative, supplying equal opportunity despite economic circumstance. What a session we had yesterday with a handful of our faculty members. We saw commercial hip hop with Melody Sinclair, commercial casting with Crocodile Casting, the power of empowerment with Amy Jessup, singing audition breakdowns with Bruce Knight, and self-tape analysis with Sean Reeves and our online monologue winner, Julia. If you missed any of it, all of it, because yes, it is getting hot at the moment, fear not, as we leave all of our videos uploaded for at least a month for your access. You can find all of those videos on our YouTube page. A little colder today, but the heat is approaching, it is rising, and today we have no other than a bit of a bite coming your way to get us closer to the weekend. We have a packed lineup. We have fitness classes coming your way with Natalie Hope, sassy musical theatre dances with Carl Newsom, top tips for audition songs with Rachel Lyons, exploring text with Nick Bagnall and Joe Orton, and now tax advice Q&A with Natalie Corrigan. Hello, Natalie.
Hi, Bailey. How are you?
I'm doing all right. A little bit colder today, but the heat is approaching.
It is slightly more bearable, isn't it, today?
Yeah, slightly. Well, Natalie, what's in store for today? Because we've done a few of these sessions.
That's right, Bailey. We've done quite a few now, and it's sort of quite difficult at this point now to decide what would be the best thing to cover. So today we are going to do a bit of a recap session. Our very first session was COVID slides when everything sort of had started, and there has been some changes to that. So I'm going to discuss those changes and then go into a bit more detail, recap some of the areas that we've already talked about previously.
Amazing. And everyone, if you ever have questions, please do subscribe and leave your comments in the below. Natalie, I'll catch you later.
Bye. Thanks, Bailey. That's great. Hi, everybody. Yeah, like I've said, we've done quite a few of these now. And it's sort of trying to decide what's going to be the best thing to cover in another session if you've tuned into any of our previous ones before. So I thought today it'd be quite good to sort of go back and recap from the very beginning our first presentation that we did, Alex and I, and that was sort of the COVID situation, what was available, what help was available for everybody. So I plan to go through that and just talk briefly about the changes that's happened. Things have adapted. There's been obviously the second grant now available, so we'll talk about that in a bit more detail. The sort of second and third talk that I did, we really went back to basics on those, what it meant to be self-employed, what is a tax return, when would be a good time to register to be self-employed, when is that time that you need to do that, and we then also sort of applied that knowledge then into the numbers, and we looked at applying tax and national insurance to those figures, to that profit figure then, and that was in, I think, our third session. Our last session that me and Alex did together, if you tuned into that one, was when we talked about limited company, and that's something that we get asked quite a lot from our clients, people that have traded for some time as a self-employed individual or are part of a partnership. When is the good time for me to become a limited company? I've heard a colleague of mine has recently done it. Is it more tax efficient? A bit more understanding. So that was a really good session last week where we went into a bit more detail about being a limited company and how a limited company as a separate legal entity is taxed in its own right in a different way. It's subject to corporation tax at 19% instead of normal tax and national insurance as a self-employed individual. We had some examples that we went through and we looked at those figures. And that was quite interesting to be able to see those differences and potentially the tax savings that could be there. We talked about advantages and those disadvantages of being a limited company, and we went on to talk about the VAT as well. So we've sort of touched on so much now, and as I've said before, it's something that we do every single day. So it's quite difficult to be able to make it as easy and understandable. So hopefully that's coming across, and these talks have been useful to you if you've attended either one or potentially all of them. So as I said, I've got some slides again to go through. We're going to recap on the COVID and all that support that's available, has been available. Some of those have now ended, and then I thought it would be good then to also sort of recap slightly on the basics a little bit, but also go into a bit more detail about the most common question that we get asked is, what can I claim on my tax return? What expenses can I claim? So that seemed to be the most appropriate sort of area that we could probably explore a little bit more, and that's what these slides will be today. And then I'll obviously open up to some questions at the end of our session. Just to say again, all I can see now is the slides, so I can't see anything coming up or questions at this point. So if you've got any questions, pop them in and I'll be able to see them at the end, but at the moment I can't see anything other than the slides. So let's start going through these then, and we can make a start. So just a small disclaimer here again that we just pop in. We've got here then about Theataccounts. So I've said this quite a few times now of who we are, but in case this is the first time that you've tuned into any of our tax talks here that we have done, we are an accountant that's set up specifically for the entertainment industry. We are run by Alex. He's the owner here at Theataccounts, and we've got a great team now. There's about 20 of us, I think, and we're growing all the time, which is fantastic. We pride ourselves, as it says now, on being really friendly and approachable. And although we do these tax talks to try and help everybody and give as much advice and hopefully just make tax and the whole self-employment, being a limited company, hopefully just gives you that little bit more confidence in those journeys. Ultimately, we are accountants, and what we do is tax returns. We can set up limited companies if you feel, actually, from tuning into our last session a couple of weeks ago, that might be a good option for you. Do get in touch. That's something that we can help you with, and we can obviously then go forward preparing limited company accounts, dealing with confirmation statements, all of those things. So we aren't just once a year accountants. We're here to help and advise our clients throughout the year, and if you've got any queries, please do get in touch. We're happy to help. So that's who Theataccounts are. I have been working at Theataccounts now for a while. I have 3 children, and I started my career in accountancy when I was 18, and I've done it sort of throughout that period of time of having children, having a bit of a break whilst having children. I also taught accountancy and tax in Birmingham for a short period of time, but it's great to be back involved in Theataccounts now. And the reason that it's a little bit sort of more special Theataccounts is because of our amazing clients that we have. So it's not just actors that we deal with. We've got musicians, agents, dancers, directors, producers, stage managers, a huge array of clients that we deal with here at Theataccounts. So it just makes our job that little bit more exciting, I suppose. Okay, so let's sort of start going through the slides then. So we've got here a diagram that we've done with all the support that was available during the COVID-19 pandemic. It all seems a bit of a blur now, doesn't it, really? When it all started in March, it was something that, I've never experienced before. Apart from sort of 9/11, I remember that, and that had an impact. But this has been massive for the world, hasn't it? And it's, really changed things for everybody, and it will continue to change for going forward for a long period of time, I think. Nothing will be quite the same again because of it. One of the areas that was available as support was obviously the self-employed income support scheme. So that was introduced to help self-employed individuals. This was quite later on. There was all that sort of hype at the beginning, wasn't there, when there wasn't much available, and that's because it is hard to be able to, for self-employed individuals that submit tax returns, to find a fair system that would be able to support them through this crisis. But obviously there was the first and the second grants, which I'm going to talk about in a bit more detail shortly. We saw the July payment on account deferral, so you didn't need to make your payment on account in July. If you did need to make one, you can if you want, but if you didn't, that's fine. It's deferred until January, 31st of Jan. There is no interest or charges payable if you did choose to defer, and that is actually being automatic, but it must be paid by January. There was that short period of a VAT deferral as well. So for those UK VAT registered businesses, it allowed you to defer payments between the 20th of March and the 30th of June 2020. So for that period of time, you didn't need to submit to pay your VAT, but that must be paid in full by the end of March 2021. So that period is now finished. There was the introduction of the bounce back loans. There was a previous loan before that, which was proving quite difficult. We had a lot of clients that got in touch with us requiring lots of information, management accounts, that sort of thing. Where this bounce back loan, because it's 100% backed via the government, it obviously made it an easier to obtain. Mixed reviews on that. Some banks were quite quick. There was a huge influx of people obviously trying to get this bounce back loan, so obviously that caused problems with the banks, I think, in terms of being able to cope with that demand. But once that was sort of settled, majority of the banks were quite good, or lenders were quite good with getting these bounce back loans. Most people could apply one day and it would have been in their bank account by the next. So up to £50,000, with 12 months no payment. So a lot of companies have benefited by that, and that's essentially has helped in the short term. But it is a loan; it is repayable back to obviously the lenders. There was obviously the mortgage holiday and the renters' rights, which was extended for a short period as well, which obviously allowed people that flexibility if they were struggling. So there was that as well. Universal credits has had sort of impact. A lot of people have had to rely on universal credits when they potentially have never ever had to look at anything like that previously. Again, mixed reviews about universal credits, of how easy that is to obtain. Lots of clients came up to us and sort of said that they were allocated caseworkers, and that made the process a bit easier. But obviously having grants, that would need to, if you did receive any universal credit, any grant that you receive as well would obviously need to be informed to them, and that would alter things. So obviously there was the grants available as well to businesses, premises that occupy premises, sorry, should I say. There was quite a few. There's a small business grant, which if you paid little or no business rates, you're entitled up to £10,000. It went up to £25,000 depending again on your rateable value of your premises. And then later on there was that discretionary grant, wasn't there, that was introduced, and that was sort of there to support those people that perhaps just didn't get that grant but still had something to pay, some liability there monthly regardless of COVID. So that was there for them, and that was quite good. And obviously the last thing there, just that job retention scheme, which was huge. It was available to employers to be able to furlough their staff and claim 80% of their wages, being able to top up by 20% if need be. Lots of clients have a bit of both. They are employed and self-employed, and they were able to get some furlough pay through their employment. So that has been quite good. It's been extended to October with some changes in that. But on the whole, there's a lot there. There's a lot that's been given to people to be able to cope through this, and hopefully yourself have been able to benefit and be supported by at least one of those on there. We produced, I say we, I didn't actually produce it. Some of our other amazing Theataccounts team produced this. And they did it. Alex and Becky stayed up. I think James as well was involved, stayed up particularly late when it sort of all happened, to be able to prepare this, and it's been fantastic. It's obviously, we published it on the 1st of April there, so there's been some changes to it, but it's sort of great to be able to follow through. If you're self-employed, you can follow that through there. Did you submit a tax return? No. Well, there was that extension, wasn't there, of 4 weeks to be able to do it. So we had an influx of people wanting their tax returns done by that 4-week deadline. This was great, and it was able to sort of help our clients see what potentially there was available. There's the employed section there, that obviously if people were ill, what was you able to get? You could have got the statutory sick pay. There was the universal credit support if you wasn't able to be furloughed, and all of those other sort of VAT that I've talked about. If you've got a business, there was obviously the loans and the grants available. There's the business interruption loan was the first loan, as I mentioned. And then that later that came with the bounce back loan. So a huge amount there, and as I say, hopefully now we're, you know, in August, we're months on from this, when this was first published, that people have been able to benefit from all of these systems that have been put into place to support people through this pandemic. Let's just talk about, which is most sort of popular, I suppose, with our industry, is the self-employed income support scheme. The scheme was obviously extended, and we've actually, this slide we did obviously in the very beginning of our COVID first ever one, but we've obviously adapted this slightly now as more information gets released, and as accountants we just rely on that guidance from HMRC to be sent to us, so that we are then able to pass that on to our clients. And often things will get released in the media, on the TV, and then we are still waiting for that full guidance. So it can make our job difficult when we've got clients then on the phone asking us lots of questions and we're not 100% sure. So it's been a manic few months here. I managed to get away last week. We went to Devon for the week, and it was lovely just to get away, because it has been incredibly busy. We as accountants always have a manic January. That's our crazy time, and you know, we don't see our children, we work all the hours, we loads of rubbish because we just here in the office all the time, and we end up ordering takeaway or anything just to get us through the day and the evening really. And we're often here gone midnight on the 31st of January, and that's a really hectic time for us, and we very often are relieved when February comes around and we can breathe again. And this is how it's been actually for the last few months for us. It's been manic, as it has for lots of people. It's been a crazy time, and those people that, you know, have suddenly their work has stopped, you know, you've been busy, you've been going off into different countries, and shows, everything just stopped, and it was a really difficult time for lots and lots of people. So the scheme was extended. The first grant now, the applications have closed. That was obviously covering March, April and May, and that was an 80% of taxable profits up to or capped at that £2,500 a month, and that's now closed. However, there is the second, and they have actually said the second and final grant. So if you were eligible for the first, and you can confirm to HMRC that you have been affected on or after the 14th of July, so that's the date that they've put in the guidance, is the 14th of July. Is your business adversely affected from the 14th of July or after that date, then you can make a claim for that second and final grant, and that's opening up from the 17th of August, so not long now. The only sort of major difference here is the 70% of taxable profits. So that's that cap at 2190. of 6570 for the 3-month period. We've had more guidance in terms of what can you do if you've got this, if you do take the grant. And it does state that you can continue to work, albeit you must be affected in some way, but you can continue to work if there is some work there available and still receive the grant. You could start a new trade and still receive the grant. You can take on other employment, including voluntary work. So all of those things enable you still to be able to take this second grant. Again, some clients come back to me and say, well, am I eligible? What, I've got to prove to HMRC that it has been, our business has been affected. What does that mean? And again, the guidance is saying, if you've been unable to work because you've been ill, then you've been affected at some point. If you have less customers now than you did before, if your staff have been unable to come to work for whatever reason, if you've lost 1 or 2 contracts. So most people in this industry have been affected. It's obvious. So there should be no issue really receiving that second grant if you have been affected in some way. If you wanted any further clarity, if you did think actually my circumstances are different because perhaps you are being furloughed, perhaps there's other income, perhaps you're a director of a limited company, perhaps there's lots of different things, we're happy to sort of talk to you on a one-to-one basis if need be and give you any advice that we can. So as I say, that opens up now for that second and final grant on the 17th of August. You've got up until the 19th of October to make the claim for that second grant. It will be the same as the first grant, so you will be contacted by HMRC. A third party, an accountant, an agent can't do it for you. You must do it yourself. And I think it's a pretty simple process to be able to do, and the money should sort of be in your bank account within sort of, I think it's 5-6 days. It's pretty quick after you've made your claim. Obviously, if you are in receipt of universal credits, you would need to also inform those of this grant that you received. So that's the second grant. The eligibility is still the same in that respect as the first. The only other addition to that is that your business must be adversely affected on or after the 14th of July 2020 as well to be eligible for that second grant. The next slide is quite a good one actually, and it's the common questions that we get asked when it comes to the self-employed income support scheme. The first one, can I claim the grant if I currently have other income? So the answer to that is yes, you can currently receive other income, which I mentioned, such as PAYE or work elsewhere. So yes is the answer for that. But as I say, you are going to be affected on the 14th or afterwards. Can I claim the grant if I am currently on maternity leave? Now, this was always a bit of a subject that we were awaiting clarity on, really. And initially, if you were on maternity leave for the duration of COVID, especially the first grant and the months that covered, if you were in receipt of maternity allowance, then that was what you would have expected to have, and therefore we would have said, well, you wouldn't have been affected because you were in receipt of that maternity allowance that you were obviously expecting to only earn during that period. However, we've had further guidance on this now, and the answer is actually potentially yes. You may be eligible for the grants if your income has or will going forward be affected by COVID-19. And I think that's the key now, is that they recognise, HMRC recognise this is going to be, we're in it for the long haul, and that it will have an effect a bit later. So yes, potentially is the answer. And again, if you wanted any further clarity on that, I'm happy to sort of have a one-to-one talk. Maybe it depends when your maternity ends or those sorts of things. If your maternity ends and you've got no line work lined up, that would then make sense that you would be entitled to that grant. What can I do if you do not agree with the value of the grant? So we've had this quite a few times now with obviously the first grant. So we've had some clients that didn't agree with the figures that were given. We're happy to check any figures, and the same goes with the second grant, to make sure that it's something that we come to as well. We get to that figure. And you can also ask HMRC to review their calculations. Mixed response to that, really. We've had some clients successful and some not, so it's worth if you do feel that figure is incorrect, the value of your grant it is worth getting in touch with HMRC and seeing what you can do. This was again towards the beginning. Will HMRC consider using my tax return for 2020? Again, we were waiting on guidance, but it's firm to say now that they are only using information prior to the 3 tax years, and we sort of established that quite early on then, that they definitely would not use anything for 2020 due to the increased risks of fraudulent claims. I only work for 6 months of the year. Is it calculated pro rata? No, unfortunately not. So the income will be divided over your 12 months as opposed to 6 months. So, some people coming to us and saying, well, actually, in that tax return, the profit that I received, my taxable profit, was quite low because I only worked for 4, 5, 6 months. And therefore, that's a relatively low figure compared to perhaps what now would be put in my 1920 tax return. But unfortunately not. That figure would have just been divided and used. Again, this was more of a question at the very beginning. There was that confusion over what actual figure it was going to be. So a taxable profit is income minus your expenses, minus any capital allowances that were then claimed as well, which I'm going to talk about capital allowances in shortly. So they were the most common questions when it came to the grants. And if you've got any further ones, I'm happy to sort of answer at the end of the session, or again, get in touch with Alex or myself. Happy to help. Okay, so as I mentioned, what we're going to try and cover in this talk today was sort of just recapping. I'm not going to spend ages on this, but recapping about what a tax return is and what you needed to pay. I'm going to go into more detail about expenses because I think that's quite relevant to most people, and it's something that we get asked about all the time. But there again, just to recap really, what's a tax return? It's a tax return issued by HMRC. As a self-employed individual, you need to submit a tax return, and it's used by HMRC to calculate how much tax and national insurance you need to pay, and potentially there is that side when you might be actually due tax back. It's just got a list there of the information that you would need to be able to complete the tax return there. So your income, your expenses, PAYE details, national insurance number, and that UTR number that you're issued when you become self-employed. Record keeping, really important, and there's some clients that are fantastic at it and really enjoy it, but majority of people, it's something that's a bit of an area that it's left, I suppose. And we're all busy, and you guys are busy doing whatever you do, and it's that sort of thing that you think, oh, I've really got to get that done, I really need to keep on top of it. And it really is important to be able to do that. HMRC require you to keep your records for 6 years after the tax year. Business expenses can be in the form of receipts or bank statements, but you would need to keep receipts for HMRC purposes as well. E-receipts fine now if you're taking pictures or you're actually having a receipt via email, that is okay instead of a physical receipt. I talked about this before, about trying to start as you mean to go on. Putting those receipts into categories is always going to be helpful for you, or if you have an accountant that does your tax return for you. Every time that you purchase anything that is business related, and every time you travel and you have those receipt. If you was to just have envelopes where you popped each one into the category of travel, food, subscriptions, hair, beauty, all of those, if you just had envelopes and each one went in there, whether you do your tax return yourself or even if you do appoint an accountant, it just makes life easier towards the end when it's time for tax return time. So just recapping quickly on that. Let's go back. There we go. So registering as self-employed. As soon as you start self-employed work is the point when you need to be registered as a self-employed individual with HMRC. It's a really simple process. If you were to come on board with us here at Theataccounts, if you're just starting your business, you're starting a new trade and you need to get registered with HMRC, then that's something that we can do for you here at Theataccounts. But as I say, it is quite simple to do it yourself online. So registering as self-employed, you'll be given that UTR number. We talked about keeping receipts. Anything that you purchase to help you do your work can be claimed, training, headshots, costume, props, agent fees, professional subscriptions. So that is, I say, it's always a confusing area. We've got a great blog on our website that's sort of what we would typically see in the industry of expenses. That's always a good one to check out as well if you know you don't want to miss anything. But keep those receipts. Don't leave it to the last minute. We would love a nice, quieter January. I don't think it'll happen, but it would be nice. You know, obviously, once that tax year has finished, you have from April then up until the 31st of January to submit that tax return. It's a huge amount of time. We have seen a huge increase in people utilising the downtime, the lockdown, to actually get things over to us a lot sooner than they would have. So that's been positive for us. And that's great. People, you know, really do get a sense of satisfaction by doing that, like getting things sorted. And it's just one less thing to worry about. So when things do start picking up, and things are starting to pick up, the feedback from clients is, you know, really excited. Great, I've got a contract coming up now, and a lady's got one in America, and you know, we really are seeing people are doing outdoor performances. So things are going to get better. It's not going to be overnight, but things will start steadily getting better. And if things like this side of things, the boring bit, the tax side, if that can be up to date, that's always going to make life easier for you, so that you can carry on later in the year doing the bit that you love and getting back to your trade. Pre-trade expenses. So if you are just starting out or you're going to start a new trade going forward, some expenses that you incur prior to actually registering as self-employed, you may be able to claim back in that first tax return. Keep hold of those. You know, you might need to purchase equipment beforehand. You might travel to auditions and meetings. So all of those costs we call the pre-trade expenses, you're able to keep hold of, and you might be able to claim certain amounts of those back. So it's always worth keeping hold of. Income in your tax return, it's your worldwide income that we obviously need to showing there in there, and it's not just your self-employed profits. If you're part of a partnership, if you also work PAYE, if you have rental income, if you're a limited company and you receive dividends and a salary potentially through that, there's other income. There's certain benefits as well that are taxable, you know, and pension. So you know, it's lots of items of income that we would include on your tax return that you need to keep hold of. Okay, so this bit is the sort of where we're going into a little bit more detail. What expenses can I claim on my tax return? And it's one of the most confusing areas when you're self-employed, is working out what expenses you can claim on your tax return. And it's that bit, it's those expenses that have that what we call duality of purpose. The ones that are direct and they're wholly and exclusively for the purposes of your trade or profession, those sort of direct ones, those are easy. You know that 100% of that cost is business related, and therefore we can claim 100% of it as an allowable expense. But there's those expenses, and especially in this industry, in our industry, that have that duality of purpose. So I'll just read what it's saying there and slow down slightly. So HMRC states that when deciding if an expense is deductible or not for tax purposes, it is important to consider if the expenditure was incurred wholly and exclusively for the purposes of your trade or profession. HMRC also recognises some expenditure has a duality of purpose. This is expenditure that is incurred for more than one reason, such as business and personal. An example would be your mobile phone bill. We're going to talk about duality of purpose on the next slide in a little bit more detail, but it's being able to, of that expense, being able to extract from that the business element. And then that's the part then that we are allowed to put through. So we're extracting the business element of it and taking away the personal side of it. We've got a list here, and this is pretty much what I talked about on our website, what we've got there. These are typical expenses that we would see with our clients. So agent fees, you know, they take it majority of the time straight away. You're left with that net figure then. Your income is the gross, and your agent fees are actually an expense, and obviously those are you're able to claim that in their entirety. We're going to have travel costs and subsistence. There's going to be accommodation if you're working away from home, costumes and props, laundry and cleaning. Sometimes we see that coming through. Postage, less and less postage now, really, but there is the occasional bit of postage that comes through. Stationery, computer equipment that people need, a laptop to be able to do their work. We see bank charges, telephone costs, internet costs. Obviously, if you do appoint an accountant, accountant's fees, professional subscriptions, advertising. If you're advertising yourself, you're advertising your business. Perhaps you set up a website. Those are going to be costs. You've got your show reel costs. You've prepared a short videotape, examples of your work. You may have paid a photographer to take professional photographs for a new casting role. Those types of expenses are typical of what we see. Professional lessons, so you might have had singing lessons, vocal training, all of those lessons, singing, dancing, all of those would be allowable. And we've got research costs. Use of home, always a tricky one, always one that people are not sure about. So I've got a slide for that shortly that I'll talk about in a bit more detail. Okay, so we go on then to duality of purpose. So I'm going to talk about this in a little bit more detail then. And we've got some examples to run through to hopefully clarify the understanding when it comes to duality of purpose. So the rule is that you must be able to identify the business proportion or the cost. So we're talking about expenses where they have a duality of purpose, where the mobile phone bill you use both for home or for personal and for business. That has a duality of purpose. You use it for both. So the rule, when you can identify, you must be able to identify somehow what part of that expense is wholly and exclusively for business. Actually, HMRC do say that if you can't actually identify the business element for some reason, it's not easy to be able to extract that business portion, then actually you can't claim any of it. Okay, and you would have to treat the whole lot as a business private, as a private expense rather than a business. So you must be able to extract from an expense that has a duality of purpose the business element. You must be able to do that. How do you do it then? So let's have a look at this example. So Matthew has one telephone line in his house. He works from home. He uses the phone to make and receive business and private calls. Here, there is an identifiable business element. Matthew can look at an itemised phone bill and see the exact costs of the business calls. Matthew can therefore include a proportion of his phone costs as a deduction from his income. The proportion he will claim is the ratio of business calls to private calls. And it's saying here that you know, in practice, it may be sufficient to make a detailed record for, say, a couple of months, and then take this proportion of the bills for the whole year. So what you could potentially do is get the first couple of months of your phone bill, do that itemizing, which, you know, isn't going to be a 5-minute job, but if you did that and you could get some sort of average from that, then you could then, you know, HMRC would see that would be okay to then apply that average month on month then. And obviously just be wary that if things would alter and you're on holiday for a month, you're not working, then you would need to obviously update that accordingly. But that's just giving you an example. Let's have a look at Angela. So Angela's a painter living in Oxford. She's a business client who lives in Edinburgh. She travels by train to Edinburgh to see the client, but stays on for a week on a holiday. This is quite a common one. You know, if you do need to travel away very often, you might say to your partner, come with me, let's make a weekend of it. So this is quite common actually. So the question is, can she claim the cost of the train travel to Edinburgh as a business expense, knowing that she's going to then stay on for a holiday after that? So here there is no separately identifiable business element. The train travel covers both the private function of getting her to a holiday destination and allowing her to see a client. And because we can't separate that, you would, if she was going on holiday anyway, she would have had to travel. So that's the point here, that cost is personal. So because there's no separately identifiable cost, she's not allowed to treat the business, treat the travel as a business cost. However, note that the separate cost then from her travelling from that train station Edinburgh just to see her client perhaps further away, then that part would be, because she wouldn't have done that bit if she was on holiday for the duration. So the additional part that she's doing that just relates to going to see that client, and any expenses that she might incur while she was there would be allowable, but she would, anything to do with going to Edinburgh as a holiday would not. Okay, so hopefully that sort of helped understand what duality of purpose is, and how when you have those costs in your own business, how you might be able to break those costs down to identify that business element. We've got another one here, just common sort of questions that we get. That's quite good to go through. So I've just bought some new clothes for work. Can I put this cost through my accounts? Again, quite common in this industry. So the general rule for clothing is that a self-employed person cannot claim a deduction for the cost of a wardrobe of every day. We all need to wear clothes. It's common decency. We all need to wear clothing. However, the cost of clothing acquired for a film, a stage, or a TV performance is allowable. This clothing is not regarded as everyday wardrobe, and it is a costume used in a performance. So that's the difference when we're saying, well, it's not just your everyday wardrobe, this is the costume that you've acquired that clothing to wear to be able to do what you do. The cost of costume and grooming, such as hair and makeup incurred by a performer making personal appearances, the sole purpose of which is to promote their business activities, is also allowable. So if you normally wear glasses, but for performances you've had to purchase contact lenses as the character does not wear glasses, then such an expense we would see as being should be deductible. You should be allowed that. So it's using your common sense really. If you are having an audition where there is set criteria of what you must wear, then that would be important for you to be able to claim that, because you've gone out and purposely bought that clothing for your audition. We've got another question here. I've recently had cosmetic surgery. Can I include these costs in my accounts? And unfortunately, the answer is probably no. Okay, only in exceptional circumstances will non-health related operations to change personal appearance by reversing or masking the aging process not have a private purpose. So if the purpose of change your appearance was a private wish to improve or change your appearance, then no deduction would be due. However, some performers are able to show that the expenditure has been incurred solely for professional purposes. One example is a radio performer who started to do TV work. She's advised that her irregular teeth are holding her back her TV work. So she has had cosmetic surgery to correct this. It was established with HMRC that if she was previously satisfied with her appearance and it was only the TV work and being advised about her irregular teeth was the sole reason, then that should be allowable. Okay, so it's those sorts of things. It's a difficult area. It's a grey area. But actually, that's a grey box is quite appropriate. It is a grey area, and you know, normally any, you know, if you do have your teeth whitened because of your job that you're in, your job is about how you look, how you appear, your fitness, all of those things. If you have your teeth whitened, then that obviously will always be with you in years to come, and that's obviously enhancing yourself, and that's when things get a little bit more of a grey area. Okay, the next slide talks about motor and travel costs. So HMRC set out guidelines when claiming motor and travel costs. So examples of costs that can be claimed are below. So if you use your vehicle to do what you do, most people do drive, then you can claim a proportion of those costs. So they might include your motor insurance, repairs and servicing, fuel, motor hire charges, breakdown cover. You can obviously, we're talking about travel costs as well, you know, going on a train, on a bus, flying, all of those costs would be allowable for business purposes if you've incurred them. Just be careful, we go back to that duality of purpose. That starts to kick in here as well when it comes to motor costs. So you've got to remember that rule. Can you identify from those motor costs, because you use your car for both for personal and business, can you identify the business proportion? Can you extract that from those costs? If you can't, and you can't do it, then you can't claim it. So just remember those rules on that, on the duality of purpose there. Or if you didn't think that was a bit too complicated to be able to do, you do have the option to actually claim mileage instead. So this is when we actually say it's a simplified method. Keep a mileage log of where you are travelling in your vehicle, and you can claim up to 45 pence for the first 10,000 miles and then 25 pence thereafter. So that's something that probably more people use and go through, but you have the option of one or the other. As I say, if you do choose the mileage option, then it's important that you keep an accurate business mileage log of where you're going to and from and the mileage that you have travelled. Also, more and more now people are using bikes to get around and to travel, and there is actually an allowance for a bike as well. You could potentially do a similar thing where you could put through the cost of your bike. Again, thinking about that duality of purpose though, and any perhaps costs incurred in having that bike, perhaps repairs or insurance or those kinds of costs. That's always an option. Or you could actually claim the 20 pence per mile as well. So that's just something to bear in mind. If you, and I think that's being encouraged so much by now. I wouldn't be able to do it. I live too far. Well, I could do it, but I wouldn't do it because I'm not that fit really. But I live about half an hour away, probably from here, from the office. So it's too far for me. And most times when I go to school, I'm dropping kids off at school. I don't think I can get 3 kids on my bike. But, you know, if you, especially those of you that live in London and those busier cities, then that might be actually something you do. So just be aware of that too. Capital allowances then. So I talked about this at the beginning when we talked about the grants and working out the figure that was then classed as your trading profits. So, you know, you can claim capital allowances on vehicles you buy using your business. What does that mean? So the actual cost of the vehicle now. This means you can deduct part of the value from your profits before you pay tax. The percentage you deduct depends on the vehicle. For business vehicles, the percentage you can deduct depends on the CO2 emissions. So normally the written down allowance is 18%. and therefore you can claim a proportion of that over a period of time. Some cars with lower CO2 emissions may qualify for enhanced capital allowances, and that's something that you could look into potentially there as well. So whichever route it just says there at the bottom of this slide of motor costs that you decide to claim, other travel costs are not affected. So you're still going to have, perhaps you do use your vehicle, but then you do also travel by tube as well, or train if you're, as I say, you don't live in London, and then some of your work is inside London that you might choose there just to get the train. That's absolutely fine. That's separate. Okay, so the other area that I'm going to talk in a bit more detail about is use of home, and this again is one of those areas that people aren't quite sure about how much of that cost they can claim. It's something that we're all doing a lot more of. That I was working at home for quite a period of time. We all were through lockdown, so it's something that suddenly a lot of people have having to do, and I do think perhaps will continue to do as well. In your industry, it's always been there as well. You might use your home as your office. However, there's that duality of purpose again. It's obviously your home as well. So how do you extract from your home bills a proportion that we can put through as a business element? That's the question. So it's saying here, your home may have a dual purpose if you carry out some or all of your trade at home. Even if you carry out most of your trade elsewhere, you can still entitled to claim a proportion of your household expenses, provided that there are times when part of your home is used solely for trade purposes. Okay, so some people choose to go and rent an office space, and if they rent an office for £500 a month, that cost is an allowable expense. You in the early days might not be able to afford to go and rent an office as much as you might probably like to think, yeah, let's rent an office, let's go and have a makeshift office for me. You might not be able to afford to do that, and therefore you have to use your home initially to be able to run your business. And that's the purpose of use of home here. It's designed to cover the costs associated with running or working from home. Many of the bills for household expenses are going to cover both trade and personal private use. For example, a self-employed person who uses electricity, both privately and for the trade, will normally get one electricity bill. A single bill does not mean that the whole of the expenditure is allowable. The part of the cost associated to trade use is allowable. So it's going back to, of that bill, can we extract an amount that is reasonably related to our business, reasonably. Okay, that's the key here. HMRC do have a tool online actually that can help you with this, where you can enter into that all the hours that you potentially work from home in a week, and that will actually ask quite a few questions, but it might help you sort of get to a figure that then you can claim as a monthly amount or an annual amount in your tax returns. Let's have a look at this example then. So Angela writes up her trade records at home. She uses a room solely for trade use for a short period each week. She estimates that £104 covers the cost of the proportion of the establishment costs plus the electricity for heating and lighting. Although the claim for 104 is obviously an estimate of £2 per week, the claim is small and reflects the fact of the case. It is a reasonable estimate of the expenses incurred. So she's just worked out that £2 actually a week is going to be a reasonable amount to cover that she's using that short period of time each week. It all depends how long you're going to be at home for. Let's have a look at another example then. So Bill runs a small business. He uses one small room at home as an office exclusively for the purpose of his trade. The room represents 5% of the total floor area of the house. There's his bills. We've got his council tax, insurance, and mortgage interest bills. Total £4,500. So he claims 5% of that, which is 225. His electricity bill for heating and lighting is 300, so he's getting his claim of 5% of that, which is £15. So his total claim is 240. Although Bill has apportioned his electricity bill by floor rather than usage, the amount claimed is small, and there is nothing to suggest that the business use is significantly greater or lesser than his private use. So that's a good one there of how to do it, because it is confusing. How can you extract? It's not like a phone bill where you're going to get an itemised bill. It is slightly different. Bert runs a small business. We've got example 3 here. Bert runs a small business. He uses a spare bedroom at home as his office, except for a week at Easter and a week at Christmas. All he does is to write up his records once a week. The house has 10 rooms, so Bert calculates that his trade expense based on 1/10 of the total cost will be £450, but Bert recognises that that is far too much for what he actually does at home. Bert estimates that £104 covers the cost of the proportion of the establishment costs plus the electricity for heating and lighting. So although the claim for 104 is obviously an estimated gain of that £2 per week, it's small, but it reflects the facts of the case, and it's a reasonable estimate of the expenses that he incurs. So it's a difficult one. Do have a look at HMRC if you wanted any more guidance. Obviously, if you have an accountant on board, we would work these bits out for you based on the information that you provide to us. But hopefully those examples just give you a bit of an insight into what we would typically see there. You know, and there's always that opinion, isn't there, of that, you know, if you live in a big house or whether you live in a smaller house, perhaps you have a 1-bedroom flat and a 6-bedroom house, actually you could still do that work from the 1-bedroom flat, from the 6-bedroom house. So it's getting, you know, sort of a balance, isn't it, when it comes to this, and being reasonable. I think as long as you are putting a reasonable amount through, there shouldn't be a problem with this. Okay, I think I'm done talking. So hopefully that's been useful to you. I'm just going to go on to the next slide. On there, you've got Alex's email address. So if you have any queries after today's session going forward, Alex, who, as I say, has done a couple of these with me now, he's going on holiday actually next week. Although I've had my holiday, so I shouldn't be jealous, but he's off on holiday from Saturday. That's his email address there, and you've got mine there as well. If you should want to get in touch with us with any queries, or you are looking for an accountant, we would love to hear from you. We can have a chat. Our fees are reasonable. Most people, you know, expect, I think, higher than they probably are. Do come and see us, have a look. You know, we're happy to quote you for your work. We're reasonable, we're competitive with our fees. So do get in touch with us. Our website's there as well. Remember, there is some blogs on there that are useful to have a look at. Check us out on Twitter as well. Alex loves a bit of Twitter, so he runs our social media side of the business. There's regular competitions on there which are worth entering, so do check us out on Twitter as well. I'm going to stop sharing now, so I can see if there's any questions that have come potentially up. Let's have a look. So we've got a couple that have come through. Let's have a look. Green. Hi, Bailey. Oh, he's gone again. Thanks for this, Elliot Green's put, do you need to keep all receipts or do bank statements justify? For the purposes of completing a tax return, a bank statement would be okay, but HMRC require you to keep your receipts to prove those transactions alongside your bank statements, actually. So yes, you do need to keep your receipts somewhere up to 6 years after the tax year. Elliot's also asked, can you claim for meals? So this is when you are normally, no, again, it's one of those areas a bit grey in our industry where normally, you know, you've got to eat, we've got to clothe, we've got to wear clothing, and we've also got to eat. So can you claim for meals? The answer is normally no. However, if you're away from home and you're working on tour, then we would expect to see then some expenses coming through for food as well. We've got another question on agent fee as an expense. If your agent gets your fee and then pays you, so you never see the full amount in your account, how do you demonstrate the agent fee? So as I said, actually your income is the gross amount before that agent fee. So you would need to work backwards and include income at the gross amount and the agent fee as an expense so that it conjures off them. But actually your income is before the agent fees. Hopefully that's answered that question. I think that might be it then. That's all the questions that have come through. Please do get in touch. Happy to help. Happy as well for any feedback on, we do these every couple of weeks and I think they're running now for a few more months. We would love any feedback on what you would like covered. Do you just want a whole questions and answer session? Do get in touch, email me or Alex, and yeah, any feedback on what you would like covered would be brilliant.
Thank you so much for that, Natalie. Sorry, the connection was a bit funny when it came on, so I went, no, let's go, let's make that. But Natalie, can't wait to see you again at CCI. Again, everyone, thank you for your questions. Next time we come, get some more at the ready, so we can keep on going. But Natalie, thank you so much. Enjoy the sun, as it were, and see you soon.
Yeah, thanks, Bailey. A pleasure. Bye.
Yeah, bye-bye. That was Natalie from Theataccounts, everyone. Oh, my goodness. Righty, coming up in just under an hour, Nick Bagnall is back and is with Joe Orton, and we'll be exploring plays. Ooh, what would it be? To find out,